I've been talking about gold. I've been saying gold and silver place to be. You know, if we look at it, you can't argue against it really. I mean, here's a weekly chart. Here's the breakout back here. Since then, you've had this huge range that's taken place. And you could either draw it up to there, you could draw it down in here. It depends on, you know, where you want to put the range, but let's just call it the whole thing. But notice here, this is the break. Here's your lows. Here's an attempt to break it down, does a hammer reversal, ends up coming back, testing in here, can't get under it. This now looks like what? Head and shoulders inverse. You basically have your neckline up here at the top. If it gets over this, folks, it's going to go after the high. And then if it gets over that one, it's going to go after this one up here. So, I mean, gold is set up nicely. This is the weekly. We know that gold itself is doing its thing. Here's the GDX doing its thing. We can look on the monthly and see that it too is setting up nicely. Yes, you had this big drawdown, right? But then you get the push up, a retrace. Here's a swing point low, tries to break, but can't. That's important. Now you're trying to reverse back up to the top side. You get to the top side, you go back up here. That 36 level, if you look on the weekly, it is the highs. It's the highs back here. The setup is positive. Bullion itself, strong, trying to break higher, up above 2,000 again, probably going to 25 or 3,000. Gold stocks are going to follow. And if you look at the two, right, gold has a sinal wave that looks like this. Gold stocks has a sinal wave that looks like that. In other words, they're going to have higher amplitudes than the gold itself. I'll be back next time and we'll look at some individual stocks.